Welcome to Building AI. I'm 𝗲𝗿𝗀𝗀𝗃, and today we are exploring a critical question for AI infrastructure investment. How do European venture capitalists evaluate AI security companies when technology is changing every 6 months, when companies are still figuring out their needs, and when the regulatory environment is actually evolving so rapidly? Now, to help me unpack this, I have with me today Andreas Goeldi, partner at b2venture, one of Europe's leading early-stage venture capitalist firm. And Andreas brings us a unique perspective as both a serial entrepreneur and an investor with over 25 years in the technology field, having funded multiple companies, including early machine learning startups in Boston. Now, Andreas is going to walk us through how venture capitalists assess AI infrastructure opportunities, what separates winning companies from all the rest, and why European AI regulation might actually create a competitive advantages for the right startups. So, Andreas, first of all, thank you very much for joining me.
Well, thank you for the invitation and thanks for having me. It's great to be here.
Andreas, you have been both an entrepreneur and an investor, so with over 25 years of experience, let's say, in the field, and you funded actually companies that were early adopters of machine learning and cloud infrastructure back in Boston. Now, I would like to ask you, as a venture capitalist, you are certainly seeing this current AI infrastructure wave from the investor side. Do you evaluate AI security startups differently from, for example, SaaS, from software as a service companies, compare, let's say, to 5 years ago, 10 years ago?
Yeah, that's a great question. I would say there are a lot of common aspects in how we evaluate companies, but also some very important differences. The common aspects is, of course, we look at things like founder market fit, team quality, go-to-market strategy, and so on. So all the usual stuff, of course, that you would look at in any startup. And I think it's very important that also AI infrastructure companies, of course, are very aware of these bread and butter criteria when they are going out for investment. The reason I'm saying that is because we often see startups that are very tech heavy and are really optimized towards one particular feature that they are particularly great at. And that's wonderful, but that doesn't really make a company, right? And you see that often, for instance, in university spin-offs where they have the best technology in a very, very narrow field, but then have not really considered all the other aspects that make a startup successful. So in other words, these basics have to be present in AI infrastructure companies as well. But where I would say there is a clear difference is in the aspect of technology risk and also technology differentiation. Because when you look at a traditional software as a service company, SaaS company, it has product risk, right? You want to find product market fit, of course. For that, you need to understand customer requirements very precisely. You don't really have a lot of deep technology risk. We all know how to build a SaaS product, right? You can find millions of developers who are familiar with the underlying stack elements and so on. There are a lot of best practices. By now, you can delegate much to AI coding assistants who are trained on these best practices. So that's not a real technology risk in the more narrow sense. But in AI infrastructure, you still have very, very considerable technology risk. So the question, does this stuff actually work, is a very important question. And that's where we drill into quite a bit of detail when we evaluate a company already in the early stages of the discussion, because we have to understand what really sets this company apart in terms of its technology advantage and how is it different from its competition. Does this stuff actually work, right? Because it's still cutting edge and a lot of these startups are doing stuff that nobody else has tried to get into the market. So figuring out where do these companies really stand. Is the technology risk manageable? Is there real technological differentiation? I would say that's by far the most important difference in how we evaluate these startups.
So in the end, it doesn't matter how much technology, let's say, you have or you provide. Really, the business foundation, let's say, so to speak, are really crucial in order then to build and thrive and grow. So from that.
That's exactly right. I mean, both has to be present because I believe in the AI infrastructure space. At the end of the day, you still win because you have great technology or maybe the best technology in the market. But that's not sufficient. That's basically almost table stakes, right? Or it can be the crucial differentiator and advantage that you have in the marketplace. But you can't neglect things like go-to-market strategy and distribution. Sometimes we talk to very early stage startups in this space, and they will show us what amazing technology they have. And when then you ask them, okay, great, who are actually your customers and why do they buy your solution and how do they think about it and how much are they willing to pay? Very often these startups don't really know, right? They have maybe just started exploring the marketplace, and that is something that takes much longer than most people think, right? Building technology is very hard. We all know that and appreciate that. But figuring out what your customers really want, what they are willing to pay for, that's at least as hard, right? It's a different type of hard, different kind of difficulty. You need different people to do that. But that's very often the greatest bottlenecks for technologically very advanced startups to really take their solution to the market.
Got it. It really doesn't matter how much tech and AI it's in your company. I mean, it is, but in the end, you still have to sell and to serve and to provide services to humans. So you still need that understanding and that human touch, let's say, really to a human connection. So to understand what they need.
Exactly right.
Got it. Okay. In relation specifically to this thing, I would like to dig a little bit deeper with you because, again, b2venture has invested in several AI companies. You have, again, several AI infrastructure companies in your portfolio. From your, again, investment perspective, specifically, let's say, looking at AI security or privacy companies that, again, it's actually a pretty big topic, especially here in Europe. What makes like an AI security or an AI privacy company really investable or not? So again, really connecting with what you were saying before, where do you see in this specific case, like the difference between a research project and a real business model, like in this potential?
I would say it is the awareness of the founder team that their customers are going to buy a solution and not just a feature. So we sometimes see security companies that just solve a relatively small problem. So for instance, they are hiding personally identifiable information in data that you send to an LLM. That's great, right? That's necessary. You have to do that, at least in many situations. But that's not something in isolation that a customer will buy. That is way too hard to integrate with the whole chain of solution elements that they would need to, for instance, have a reasonably workable customer service AI agent in place, right? And so the question is always, who do you really sell this to? And on what level do you have to provide a solution? So we are looking for founders who either have a very clear understanding that they are a niche solution and that they are going to sell to somebody else, probably a technology provider. So for instance, if you have this kind of anonymization solution, you could probably sell to companies that make chatbots for customer service and so on. That's totally fine. I mean, you can be a component company, right? That's not bad. The second question about this kind of play is, of course, is it going to be big enough to be a VC fundable company? That's a very separate question. But ideally, we are really looking for companies who understand the customer problem much more broadly and have one particular or two particular, three particular technological strengths where they are really good and really outstanding, but they understand that the customer is buying something much broader. And to give an example, we have companies in the field of AI risk management, for instance, 𝗀𝗏, which takes a very holistic approach, and Latticeflow, which takes a bit more of a granular model-oriented approach. So they come from either side. And they both look at the problem very broadly and have also learned their lesson, I think, in their development as companies, because they started out with a fairly focused problem and then discovered, oh, the customer actually doesn't want to just buy isolated model optimization in one particular angle, but they really care about the much broader picture, right? So how do we fulfill that? So in other words, sometimes you have a journey for a startup where they start with a very specific wedge, which brings them into a customer account and with a very recognizable specific feature. But we have to see that the founders really understand that there's this broader story that they have to cover, and they have to show a credible way how to get to this much broader solution that the customer actually wants to buy.
Got it. So in the end, again, like we said before, foundations are crucial. So business foundation are really crucial. You cannot escape that. Okay. And in this, let's say in this aspect, looking a little bit, again, really from the business side and from the market dynamics, let's say, here, this is really something I'm very curious, and I would like you to help me with that from an investor perspective. Because again, the AI sector is really moving incredibly fast. I mean, I cannot count how often or every month there is like some kind of breakthrough or there is a new innovation. Again, like one of the last one now, it's agents. So one of the last really innovation. It's really popularized at the moment. But if on one side, let's say the offer, okay, so what is provided, it's like moving incredibly fast. There is a lot of announcement. On the other side, in relation to the demand part, again, let's say of the market, and so the enterprise actually sales cycles are still quite long, because as you was also mentioning, it's very important to see, okay, what kind of solution are we really solving here with this? What kind of problem are we really solving with our solution? How do you evaluate, again, the companies that are building for enterprise needs that might not even exist yet? I know it's might be a little bit tricky, but because agents and so on and so forth, still really trying to understand here how they can really be implemented. What kind of signals do you look for that indicate like a real market demand, even again, if it's still not exploded, versus just technology enthusiasm?
It's a great question. And I think we all have to understand that we are currently in a very special and unusual phase in the technology markets as such. It's very different from maybe the last decade or so. In the last decade, it was very clear, for instance, what a SaaS company looks like and what the sales cycles are and what the process is and so on. And again, technology risk was very low. In AI, it's very much the opposite, right? There's technology risk. We all don't know what works and what's going to work next week and what's the best practice then. And more importantly, on the customer side, it's a constantly evolving landscape, right? Now, everybody talks about agents. That's great. And when you ask people, what do you really mean by that? You will get many, many different answers. Anything going from a simple chatbot to something that runs for days independently, right? And that's not the same thing, but people use the same term. So it's very challenging for startups to figure out where do we actually sell our solution and how mature are our customers in their understanding of what they actually want to buy and need to buy. So especially when it comes to security and privacy, of course, customers know, enterprises know that they have to solve that problem, right? That's obvious. And they also know that there's going to be regulation. Everybody is currently a bit confused about what that regulation is exactly going to look like in practice. And that's another topic, of course. But most companies don't necessarily have a deep understanding of how to make that actionable and really bring it to their core processes in their companies, right? And what actually to buy and what actually to look for. So it's a little bit of a common dance, almost, I would call it, between startups and enterprises to figure out what problem are we really solving here. And the way we look at it is we want to see startup companies that have certain capabilities and a broad understanding of the market, as mentioned earlier, to be able to go into this iterative process with their customers to figure out what are we actually doing here, right? And how do we add value to a specific situation? And sometimes you can be surprised. You suddenly find a situation in a customer that you wouldn't have expected, or even in a market segment, and where suddenly one of your capabilities turns out to be extremely valuable. And sometimes you have the opposite, right? Sometimes you have something that you are doing really, really well and nobody cares. And maybe they will care in 5 years from now, who knows? So it's a highly iterative and certainly somewhat chaotic process, or at least it feels chaotic quite often. But it's not unusual for these kinds of new technology waves. I mean, I started my career in the original internet boom of the 90s, right? So actually longer than 25 years, almost 30 years by now. And that was a very similar time because everybody was trying to find out, what do we do with this thing called the internet and the World Wide Web? And it was clear that it was useful, but it was not clear in what exact way. And everybody knew we have to have security, because obviously this can be very dangerous, but what that actually means, right? And the whole stack of security components that we now take for granted had to be developed first, right? Both conceptually and technologically. So in other words, we are in a very, very interesting phase. And what we look for in startups is definitely, again, points of strength that they can operate from, but also a lot of mental flexibility. And this goes back to the aspect of founder market fit. We want to see founders who understand that this is a moving target, right? And what they think they are going to sell might not be what is actually succeeding in the marketplace. They have to be very, very flexible. And this is very often quite difficult, especially for more technical founders who might be very, very proud of a certain aspect of their technology. And I understand that, right? I'm also a technologist and I know how that feels. But if the marketplace tells you, hey, that's great, but we don't really want to pay for that, then you have to be flexible enough to go to something else, right? And that's the precondition, I think, to be successful in this kind of market situation.
Got it. And with actually this example, I just crossed my mind reading like the story of NVIDIA that I already knew as an old video gamer, let's say, but I think it's actually quite a good fit here because it's like Jensen Huang, the founder of NVIDIA, he was saying how at the beginning when he started with the old graphic processing unit, again with the GPU, there was actually no market for AI at the time because there was not enough calculus, but the power of calculation, data, and so on and so forth. And so at the beginning, they decided to go to the video game spectre, and then, like as we know with the first computer for people like Elon Musk and similar, then really the company really exploded. The needs again for that grew exponentially. I think they moved from 100 billion to $4 trillion, where they are now four point something. So that's, I mean, it's an extreme case. Of course, we're talking about the one of the companies with the biggest evaluation, but certainly what you were saying, the important to understand that it's a moving target, what they're aiming for, and we really have to be flexible enough to go in that direction. That's
and by the way, NVIDIA is an excellent example for how a visionary founder can find a way to take advantage of a particular technological capability that they have, that the market might not even understand yet, right? And you can see this all the time in technology industry. I mean, another example was AWS. I was a very early AWS customer back in 2006 when it just came out, and it was quite horrible, to be honest. But we had a tiny little startup and didn't have the money to buy our own servers, so it was kind of what we wanted to try, and it turned out to be very useful. But I mean, when you think back to that time, the idea that you would buy computing capacity from an online bookseller seems extremely weird, right? But Amazon recognized, hey, we have built this capability to manage this super scalable IT infrastructure. Why not resell it to somebody else who might have the same needs? And the rest is, of course, history. And we also see this on a smaller scale with many startups. I mean, one example for our portfolio, I think that is quite illustrative. We are invested in a company called Neptune AI, which is based in Poland, and they make tools for data scientists and machine learning researchers to basically build their models. So experiment management, data management, all that goes into that. And they sold mostly in the past years to mid-market data science teams, and they were doing well, right? But not terribly spectacular for a while. And then last year, they won suddenly a new customer called OpenAI, which now trains all their big models on Neptune software, right? Which is also, of course, great to hear because the biggest American AI provider uses European software to train their models. And why was Neptune able to win this customer? Because it turns out they were the only ones in the market that was scalable enough to keep pace with OpenAI's scaling requirements, which are, of course, insane, right? They're growing their infrastructure at an insane pace. And Neptune's competitors, who previously were used by OpenAI, were not able to keep pace with that. And suddenly, this hidden, I mean, Neptune's competitors, this hidden skill that they were able to scale so quickly turned out to be extremely valuable now in winning not only OpenAI, but several other foundation model companies that are now building on Neptune software. So I think this is a great example for how you have to be very flexible, right? You suddenly discover, hey, this capability that we had that was useful, but maybe not completely decisive, suddenly turns out to be absolutely decisive in a different market segment. So let's go there, right? And chase that segment. And I think we'll see this all the time now in the AI market. It's very, very fluid, and you just have to be very flexible in keeping pace with that on all these levels.
Okay, it's a great story, actually, this one of Neptune AI. And because you mentioned, let's say again, you said it's a Polish, again, it's a Polish company. Then I would like to touch a difficult, maybe a difficult topic with you in relation to European companies, let's say the European business area. So European enterprises at the moment seems really caught between wanting to adopt AI. Again, as you mentioned also before, with all the complication at the moment in terms of, okay, how do we use them, etc. But on the other side, also being terrified of the legal consequences, also because we know from the GDPR how, high, let's say, the bar has been raised by European institution. So we are seeing again from GDPR complaints about AI training data to the new AI Act's requirements. I also talk about this with a C-level from another company, Synthetic Data, and you're saying how complex it is at the moment really to understand how to translate what the AI Act is saying into practice. And again, this is something also you mentioned to be very important. But from your perspective, is this regulatory complexity creating like investment opportunities, or at the moment, let's say, it's just making everything harder, especially considering, again, as you said, the AI market is extremely fluid. We are talking really about the moving target. So there are already all of these elements, let's say, all of these kind of elements that we need to consider. Plus, there is, again, the regulatory complexity. Are you seeing like European companies gaining like advantages by getting compliance right in this early stage, or it risks actually to choke, let's say, in some way the innovation here in Europe?
I think it's very ambivalent currently. To maybe speak about the negative impact first, there's a lot of uncertainty currently how all this regulation will turn out, especially how it's going to be enforced, because we know from GDPR that there was some enforcement for a while, but it's not like, they're going to chase every single website down that doesn't have the perfect cookie banner. So that's not what happens. And it might be very similar with AI, right? Maybe the bigger players are going to be a target for enforcement, and that has to turn out in a certain way that we don't really know where it's going to land. So there's a lot of uncertainty about that. And that's not great for especially enterprise customers, because obviously they are potentially in the crosshairs of enforcement more than smaller companies. And they are therefore reluctant to take risks. And that's never great news for innovation, because right now, especially in such a new technology, you just have to take a certain amount of risk to figure out what actually works. You have to make experiments, right? If you always have this issue of regulation, do we get sued, etc., hanging over your head, you might be very reluctant to do that and to experiment enough. And we see quite a lot currently in the European market. So where you have, for instance, in enterprises, departments who really want to roll out AI, and it makes a lot of sense, but they are held back by internal data privacy people, etc., and compliance people, who of course do their job, right? I'm not saying anything against that, but there's a lot of these cases where you just can't get anything into production because you have these concerns, and that's really slowing down European innovation, especially as it comes to rolling it out in the customer context. So why is that important? Because a startup at the end of the day only learns in specific customer situations, right? It doesn't help if you just lock yourself into a room and have great ideas about technology. At the end of the day, to succeed, you have to get it in front of customers and in the hand of customers who use this to improve their business or whatever they do with it. And if that is very slow, you have a disadvantage. And I would say, especially American AI application companies, therefore, currently have an advantage over European companies. That's just an ugly fact. If you think a little bit longer term, AI regulation is here to stay. We don't know where it's exactly going to land, but I mean, we regulate any kind of technology at the end of the day, right? Cars and airplanes, electricity, etc., etc. So that's not surprising. And AI, obviously, as an extremely powerful technology, will be regulated and needs to be regulated. And this is now a moving target. And I think European companies now are forced to deal with this reality already more than their American counterparts or Asian counterparts. And I think this can be, in the medium to long run, a strength, because you build up these capabilities, both technologically, but also organizationally, to deal with that. And you can provide solutions that work anywhere in the world. Because even if you're an American AI company, you of course want to sell to European customers, right? That's a huge market that you can't ignore. So anybody who wants to be present here has to understand and accommodate these regulations. And I think if European companies can be particularly capable at doing that, they will have an advantage as soon as this gets more concrete. So again, it's a bit ambivalent right now, right? It's certainly not great in the short run, but I hope that we'll have an advantage once the stuff becomes a lot more concrete.
Got it. It's really this time, let's say, really to understand, number one, how we can really implement this and which kind of, again, regulation and rules we want to implement on how to use it. I mean, you mentioned like airplanes and cars. I mean, we can drive cars, but we have speed limits. We have to fasten our seatbelts. So there are sidewalks and there are signs and rules. The thing is really this period again from, one person has just invented, an automobile and it's going around and it seems crazy to, 20 years later, everybody's using it and they're following certain structure. Is really this fluid moment again, as you mentioned, and this level of uncertainty that.
But I mean, just to stay with this example for a moment, EU regulation in particular is trying to do much too much currently for the degree of where we are certain about how this technology is going to develop. It feels a little bit like 𝗏𝗏𝗏𝗏 just rolled out his first automotive back in 18 something, right? Yeah. And the regulators are already trying to decide how fast we should be going on the Autobahn, right? It's a very theoretical topic right now. And I think it's very dangerous that we are setting regulations that don't really make a lot of sense. But that's probably going to be an iterative process as well.
Absolutely. And this is actually goes hand to hand with my next question. That is something I read several times again in your articles and in general. So you've mentioned that let's say Europe has great research institutions, but lacks, and I'm quoting, lacks an appetite for risk compared like to, MIT or Harvard. Again, you spend many years in Boston. So looking at the current AI landscape, are we finally like seeing European entrepreneurs take bigger swings, let's say, at the AI infrastructure, or are the biggest opportunities still, let's say, in the two main areas at the moment? So the United States on one part and Chinese companies, let's say, on the other one. Are we really, again, growing, let's say, this appetite for risk? And maybe we would not repeat like mistake like we did, with Google, with DeepMind, that, again, was funded in the UK. Then Mr. Sabis, again, was looking for funds, but then he couldn't, and he has to go to the US actually to look for funds. And then we have basically a European, let's say, company that it's part of an American one, and the founder won the Nobel Prize for chemistry actually last year. So are we, again, in short, really, are we learning from the mistakes here, or what? What do you think?
Right now, it's not great, to summarize it and to give you a few pointers maybe. So first of all, I think especially when we look at continental Europe, at some of the core countries like Germany and Switzerland, I still see a lot of missing risk appetite, especially also in younger people, sadly enough. And as a data point, of all the AI companies that I invested in Germany and Switzerland, very few of the founders are actually Swiss or German citizens. They mostly came from other countries to study here and then got stuck here and did something interesting, which is of course great, right? That's great for the economy, but it also speaks to a lack of risk affinity from people who were born here. And that's not as such a huge surprise. I always try to remind people that Silicon Valley is not a place where companies are built by people who grew up in Silicon Valley. There are very few exceptions. I think Steve Jobs was an exception, but that's the only one who came to mind. Everybody else migrated there, right? Because it's an ecosystem that is very friendly to people who come from the outside and find their way there and connect with other people who have similar intentions. And I think in Europe, we have to be much more open for that there are going to be immigrants, right, who are maybe more hungry to do something interesting. And we should be very open towards that and make that very easy. The second aspect is that very often the most promising European companies get acquired early on by American counterparts, especially big tech companies. And this has been true for a long time, unfortunately, right? When I started my career, there was still companies like Nokia and Ericsson that completely dominated mobile technology, right? Where are they now? Don't matter anymore. It went out of business even, right? And we have completely lost mobile technology to the Americans and Chinese and Koreans. So that's very sad. And I'm afraid that that's going to happen in several other categories, because I think we are very strong in certain aspects of AI technology. But if we always end up selling very early to the Americans, that's not great. Having said that, as a venture capitalist, I'm of course very mixed about this, because at the end of the day, we are in the business of generating returns for our investors, and you only do that if you have an exit. And if the exit means that your portfolio companies get acquired by big American companies, yes, that's very often very lucrative for everybody involved, right? But probably not great for the economy in the long run. I would say I'm most worried even about the fact that going public in an IPO is right now extremely difficult in Europe. Most companies go to the US, even if they're European. I mean, we are hearing in many ways the stories now from companies like Klarna and so on that might go public. Spotify's gone public.
Spotify, yeah. I was going to say Spotify was very...
Yeah. So that's, that's also not great at all, of course, for Europe. In other words, it's a multi-layered problem, right? It starts at risk affinity, even for students. And again, at MIT, during my time at MIT, all the students were constantly talking about what startup do I begin when I graduate, or before that, I even drop out of university. And that's regarded as something that makes sense if you have a great idea. In Europe, it's typically, oh, do I get a good job at Google or Microsoft or ABB or Siemens, right? That's all very comfortable and well paid, but maybe not quite the same upside. And then it goes up to, again, the broader financial market, and the way that it's quite difficult for European startups to find a great acquirer in Europe. There are very few technology companies left in Europe that can acquire a substantial startup, unfortunately.
Where do you think this comes from? I mean, it's something culturally, historically, because that's one thing. I will deviate a little bit, let's say, from our conversation, but it's still actually related to it. I mean, if we see at the moment, like with the digital revolution, some of the companies that are really, really deeply ingrained in the supply chain system, they are companies that were really, some of them, they were actually, I see here in Germany again, when they were like funded in the 19th century. I think, for example, about Zeiss, who creates basically the lens again that are used by company like ASML. So that is really a company that it's a critical companies for the supply chain. But if we think, I don't know, about real giant in the tech space in Europe, I think the first one I can really think about it is SAP, but it was funny, like in the 70s. What do you think? I mean, it's something cultural. It's like a different, let's say, view of seeing things. Like we want everything perfect in theory, and then we want to implement it. But I mean, I'm sure you know, as an entrepreneur, as an investor, that one thing again is the theory, and another one is really the amount of different elements again that pop up when you really have to implement it, or it's something else. I mean, what do you really think that Europe should? In which way, let's say, Europe in general, again, European states, let's say, they should change in order to really to change and to switch? For example, again, in this case, to build world-class AI infrastructure companies that can compete globally, but even broader, let's say, from in the digital sphere. What do you think about this?
I think it's very challenging, and what really worries me is that the mentality in Europe has started to erode even further in the last 30, 40 years or so. So again, you have examples like SAP, which is over 50 years old and is still the only major technology software company, at least, right? You have ASML, which also was founded, I think, in the 60s or something like that. In Switzerland, in particular, where I live, top 10 most valuable companies, 8 of them are over 100 years old. And 2 that are younger were both founded by immigrants. Again, that goes to how do we think about risk, right? Not so great. And in technology in particular, I mean, when I graduated from university in 95, we still had PC manufacturers in Europe. We had Siemens Nixdorf and Acorn and so on, right? Olivetti in Italy, and they have all disappeared, basically.
Yeah, sure.
Nobody wants to touch that stuff anymore. I mean, I understand that it's, of course, easier to provide all kinds of services and so on and do banking, etc. That's all fun and profitable. But I think it really has eroded Europe's position in many ways. And the question is really, how can we change that? My point of view is that maybe Europe for a while had a bit too much of a hands-off approach when it came to industrial policy, and was a little bit naive about how other parts of the world are doing that. And what I mean by that, especially is when it comes to Americans, right? So in Europe, you always hear from liberal politicians, oh, we shouldn't give out subsidies to companies. That's really dangerous, etc. Then you go to America and you look at how much the Pentagon alone, right, in defense spends on AI projects every year. And the number is $10 billion.
Yeah.
So in America, the government doesn't hand out subsidies, but it is a customer of startups, right? Companies like Palantir, which are now doing incredibly well, could not exist without the government, who committed early on to work with a startup company. And you don't find that in Europe. I mean, I know I had startups here and we tried to sell to government. And it was incredibly hard. Very often we had to collaborate with large American companies to get credibility to even land a job at a government agency. So the government is very reluctant to become a customer startup. They very often hand out subsidies for stuff that doesn't necessarily make sense. I mean, there are some definitely positive things. For instance, the European Investment Fund, in my opinion, is doing a great job at fostering the entire VC ecosystem. They're a very good partner and have a very clear strategy. And I think also really enforce high quality standards in the industry. But that typically takes decades to really really generate successful outcomes, of course, but at least we are doing that in Europe. But overall, I think we are just too reluctant to really help shape the industry. And this was quite different, I think, decades ago. There was too much of a hands-off approach. Culturally, I'm not entirely sure what has changed, to be honest. I don't think that we necessarily had a lot more wildly ambitious entrepreneurs 30, 40 years ago in Europe, but maybe I'm wrong. Maybe it has just become too comfortable to have a nice corporate job somewhere instead of striking out on your own. I mean, again, I'm obviously mostly positive. I think we have seen a lot of development. When I migrated to the United States in 2006, there was very little in Europe in terms of economic entrepreneurial ecosystem. Very few VC firms, basically no incubators, accelerators, etc. You couldn't really study entrepreneurship at the university. Now this has all fundamentally changed. We have a very rich ecosystem that is continuing to develop. So I'm quite optimistic for the younger generation, but we still have to catch up this gap that we had in between.
Right. Okay. Well, again, when you were really mentioning again this last part, I was thinking, I don't remember where I read it, or I probably heard it on a podcast, but how important it really is to create a thriving ecosystem, to have like these two legs. So you need people, you really need people, good people with expertise, and you need good capitals really to flow. In this way, let's say you have, again, the right people that don't have the right resources, let's say, to open opportunities, and then good products with a lot of mistakes, let's say, because there are always mistakes. I mean, in everything we do, and especially in business, this will really help to thrive. But again, as long as there are other areas, let's say, where it seems to provide, again, a better ecosystem and better resources, people will drive there, unless we really started to invert again this course, again, having people like you that are highly contributing actually to create a better ecosystem.
Yeah, I think that the generational aspect is something that is very important and that is not well understood in Europe. And again, I'm contrasting that to my experience in the United States. So in the United States, I experienced that a lot of very, very successful entrepreneurs still were super active in the ecosystem, right? They were angel investors, they were mentors and so on. They hung out with the young people. So my favorite example is I often went to startup events in Boston, and I noticed that there was this older guy with a long gray beard who always took pictures with a big camera. So I asked somebody, who is that? I keep seeing him in at startup events. Is that a professional photographer? And the answer was, no, that's Dan Bricklin. He's a former entrepreneur. He invented the spreadsheet. His first company was 𝗲𝗍𝗂. So he literally invented the spreadsheet, right? The killer app for PCs in the early days. And he just enjoys hanging out with the young people, right? And occasionally do an investment here or there. And that's still very hard to find in Europe. Many successful entrepreneurs, when they have their exit, I mean, not to be overly mean, but they move to Ibiza or Mallorca and start doing investing in real estate. And I mean, it's changing in all fairness, right? We are seeing more and more people who get very engaged, but that's where we need more. And especially when it comes to AI, I think my generation that has experienced some of the chaos of early stage waves of technology, like back in the internet or back when mobile and SaaS, etc., started developing. I think we can help the younger generation navigate now this chaos that we see in AI, right? Because we have a bit of intuition of how this could play out and what is important now. It's important to be fast and to be flexible and to iterate quickly and to have in-depth customer conversation and all that stuff. It's not about, oh, we have a playbook for how a SaaS company works and we have 5 KPIs that we have to care about and the rest is a given, right? It's a very, very different game. So that's where I hope that my generation can also have a contribution.
Got it. Everything gets so accelerated again now with AI and so, again, as you said, so fluid. So really to understand again what's the right target, where to shoot, it's complex, let's say, so to make this easy. Okay, so in this regard, then I would like to ask you something very complex, especially for an investor and again, an entrepreneur like yourself, it's forecasting. I know it's something very, very complex, especially in technology, but trying to look ahead, not too far, let's say 3 to 5 years, okay? So by 2030, do you see like the biggest investment opportunities in AI? I would like to keep it AI infrastructure again in this case. So what categories, let's say, are you most excited about? And you say, okay, the next 3 to 5 years, 2028, 2030, this is something probably that it has solid foundation, let's say that.
It's tough to think many years ahead, of course, in this industry that keeps changing almost on a weekly basis. But I think the topic that I'm most excited about currently, or where I see the most opportunity, is what some people now call context engineering. I would maybe frame it a little bit broader. It's really about how do we get all this information that we already have into AI models, right? And the most obvious case is LLMs, of course. I mean, the current LLMs are amazingly capable in terms of their reasoning power and so on. The difficult thing is often getting the right information into them so they can actually do something useful with it. And of course, the LLMs can still improve, right? The context windows are still too small for many applications, but I think we're getting there, constant improvements. But if you're a traditional company and you have data sitting in your SAP system, and then there's a separate CRM system, and then there's this ancient COBOL-based mainframe somewhere in a corner that manages your spare parts or whatever, it is very hard to integrate all this stuff and do something interesting with AI. That's still extremely manual, and I think holding back the industry. And then when it comes to security around that stuff, right? What is the AI actually allowed to see, and what is it allowed to do, and where can it be independent and so on? How do we deal with privacy around all that stuff? These are extremely complex questions that we have only started to scratch on the surface. Right now, everybody in the industry is excited about MCP. And for people like myself who have been around the block a few times and seen a few integration technologies, it feels like we have forgotten almost all these lessons that we learned back in the 80s or 90s even, right, about what it means to integrate data with other systems and how to assure security and privacy across these integrations. This is extremely complicated, and something like MCP will give you some superficial quick successes. That's great. But it is by far not mature enough to do something useful in a real world enterprise environment, for instance. Or even for private people, right? Do I want to show my tax data to OpenAI? I'm not entirely sure, right? On what level might that be, etc. So there are a lot of these questions around that. So I think enabling AI to connect with the rest of the world, and it doesn't even stop with digital data. It goes into the real world, right? Robotics and so on are obviously an extremely important field. That's going to be an extremely demanding and very, very interesting field. And I think companies that find great solutions there, even for partial problems, are going to have a great future. So we are definitely looking at a lot of solutions that deal with these kinds of problems.
Got it. This is a message for all the aspiring, let's say, entrepreneurs, AI and digital entrepreneurs, so really to focus on this. And well, then I would like to connect this with another, let's say, with another question, because again, you are a successful entrepreneur, you are an investor, again, with really large experience. Again, in relation to this, the aspiring or the present actually entrepreneur, based on your experience, what kind of advice, let's say, would you give to these AI entrepreneurs about let's say, a sustainable business instead of just chasing the last trend, considering that, again, this is not like, doesn't have to be a sprint. Actually, most of the time it's really a marathon. So you really want to stay in the game. So what's the kind of advice would you give to these AI entrepreneurs?
You're right. It's currently very dangerous to be seduced by all these trends that we are seeing. And it is currently comparatively simple to raise money for AI startups that are chasing the latest trends, right? Because there's a lot of money in the industry currently, and that's not always healthy to build a sustainable company. You can build something that is going to look very exciting for a few months, maybe even a couple of years, and then is going to face a lot of difficulty once you want to grow further. So I think the important thing is really to think about long term. What do we want to be? What are the customer problems that we are really solving? How do we build a solid infrastructure and solid financial structure for our company? What kind of investors do we really want at our side? I mean, we are, for instance, a very long-term oriented investor. We have supported companies through decades, literally. That's very often necessary to really have a successful company. A big winner in our portfolio, for instance, is 𝗵𝗿𝗏, the translation tool company. And we first invested in this company back in 2009, right? And now it's the big star unicorn from Germany. Yes. Everybody loves it. But it took a while, right? And that's just the reality for most startups. It takes years. So you want to have this long-term orientation. And I think being patient and building something that is very solid and can also withstand the ups and downs of the market is going to be very important. I mean, right now, AI feels like it's almost at the peak probably of the hype curve. We don't know exactly. It's always hard to predict timing, but I wouldn't be surprised personally if we would see quite a bit of a downturn in the next 12 to 18 months or so. Anything else would almost be surprising, to be honest. And surviving that kind of downturn as a startup is quite tricky, but it can be very rewarding. So for instance, in my first company, we were, when the .com boom was as it peaked, we were, I think, number 4 in our market. When we came out on the other end of the bust, right, after 2-3 hard years, we were number 1. Why? The first 3 guys all went bankrupt. And I think if you are stable enough to be able to win in the long run, you have a real business. And that's the most rewarding thing that you can do as an entrepreneur. Again, my advice, even if it maybe sounds a bit counterintuitive in the currently very hot market, is think long term, think about how do we really make a solid business with that. And that's going to be rewarded in almost all cases.
Love it. Before I ask you this last question, I always ask to all my guests, I really wanted again to connect with what you just said, because you mentioned again the .com, and we also know about the .com bubble and what it happens. I remember like Jeff Bezos, who used to say like after the .com bubble, also Amazon actually plunged value, but because basically it touched everybody. But then having solid foundation, stable foundation, they went up and up and up. And then, I mean, who doesn't know Amazon actually at the moment? That's really the case. Yeah, really very, very important for all the aspiring entrepreneurs or present entrepreneurs listening. Okay, well, Andreas, I would like to, again, to end this amazing interview with one last question that I always ask to all of my guests, because it's very interesting to see the different kind of views and opinion. What is one belief that you hold about building AI and make it safe that actually most people you are seeing like they're pushing back on, but you believe that actually it's true? So in the end, you say, okay, it doesn't matter what the people are saying. I know that this is true actually about building and making AI safe.
Yeah, controversial belief. I don't know how controversial it really is, depending on who you talk to, but probably right now in this market, it might be controversial. I think the big money will be in the boring stuff. And again, this goes back to topics like integration, which is very difficult, and figuring out security around that stuff and so on. So again, when you look at a lot of successful companies, that's really where the biggest long-term successes tend to be from, right? And I believe AI is currently chasing a lot of shiny objects and cool trends and so on. And that's great, right? That's part of the technology wave. But I'm almost certain that the really great outcomes, especially from the current batch of companies, is going to be in this more boring infrastructural stuff that doesn't sound overly sexy. And because it doesn't sound too sexy, you don't have 50 other companies who are chasing the exact same problem. And that's very often in the long run where you are really going to be successful. I mean, when you look at, for instance, cloud infrastructure software, Datadog obviously is now a company that everybody admires. And they had a lot of difficulty to even find investors originally because it sounded so boring, right? So, okay, you're doing observability and you let ops people and product people collaborate a little bit with developers. That's great. How boring, right? But it turns out that it was a brilliant idea. And I think we're going to see quite a bit of that in the AI wave as well.
Not all companies need to plan to go to Mars, let's say. So
No,
it's not an absolute requirement. Got it. Well, Andreas, this has been incredibly insightful. Thank you very much. What struck me, let's say, the most is that how you are thinking beyond just the technology part, but actually how important it is the real business and the market dynamics, that this really doesn't change because still we have to deal with humans, so we have to serve people, and that's really. And as you also explained again, how it is important for, again, building like a thriving business to consider this to build and to shape the AI infrastructure companies that will be actually able to succeed. So that's really super, super important. Thank you very much for this. For all the listeners, again, who want to understand the investment landscape in the European AI infrastructure, definitely check out B2Ventures Inside and Portfolio at b2ventures. And please also, you can also follow Andreas' actually perspectives on LinkedIn and on Medium, where he publishes again regular articles about again his takes on European tech entrepreneurship. If you like this episode, please subscribe to Building AI and share it with others navigating AI infrastructure and security challenges. I'm 𝗵𝗿𝗂𝗀𝗶𝗏, and I will see you next time. Ciao.
Thank you. Bye.